Right now, more Bitcoin is sitting at a loss than at any single point in its 16-year history. Fresh on-chain data shows 10.83 million Bitcoin are now held below the price their owners originally paid, an all-time record. Together, those coins represent hundreds of billions of dollars in unrealized on-paper losses spread right across the entire network. The milestone landed as Bitcoin slipped below $61,000 this week, and the Fear and Greed Index dropped to 12, deep inside what analysts call extreme fear. Most of those underwater coins were picked up over the last several months, back when prices were noticeably higher than they are today. Crucially, a coin held at a loss only becomes a real loss if its owner decides to sell, and many long-term holders simply choose to wait. Past stretches this stressed have lined up with moments of maximum pressure on holders, though the data on its own says nothing about where the price moves next. A new report claims that billions of dollars in crypto quietly flowed through one exchange and straight to companies the United States has sanctioned. The exchange is CoinEx, and the allegation is that it served as a $3.84 billion gateway for sanctioned Iranian crypto firms. The figure comes from a blockchain analysis report that traced a web of transactions tied to firms already under U.S. and international sanctions. CoinEx has flatly rejected the accusation, saying it follows strict compliance rules and screens its users against international sanctions lists. If the allegation holds, it would put the exchange in the crosshairs of regulators who treat sanctions evasion as one of the most serious crimes in crypto. Iran has increasingly turned to digital assets as a way to move money around the heavy restrictions placed on its banks and its oil sales. For now, it is one report against one firm's denial, but $3.84 billion is a number that regulators very rarely choose to ignore. Weeks ago, a blockchain investigator publicly warned traders to be careful with one fast-rising token, and this week that warning aged remarkably well. The token is Memecore's M, and on Wednesday night it suddenly crashed 72% in just a matter of hours. The sell-off wiped out well over $1 billion in value, dragging the project's total market cap below the $1 billion mark. The collapse came weeks after a well-known on-chain sleuth flagged serious concerns about the coin in a series of public posts. At its peak, M had been one of the hottest meme coins anywhere on the market, drawing in traders chasing fast, easy gains. Now those who bought anywhere near the top are nursing steep losses, while the investigator's earlier warnings are being shared widely all over again. It is a sharp reminder that in crypto, a red flag raised early can still take weeks or even months to fully play out. Subscribe now.